Good morning, students. In my previous lecture, I have already introduced with you the topic depreciation from accounts. In my lecture, I have discussed with you what is depreciation, what are the features of depreciation, and the causes of depreciation. Today, in my lecture, first of all, I will discuss with you that is what is the objectives for depreciation, that is need for depreciation. So today's discussion is need for depreciation or the objectives of depreciation. That is why we necessary to charge depreciation. What is the necessity? Objective, need, necessity for charging depreciation. Now, firstly, to ascertain correct profit of the business, to ascertain correct profit or loss of the business. So students, as you know, depreciation is a charge against the profit. Now why depreciation is charged? Now depreciation is charged because the assets is used and its value get reduced. So depreciation is required to be charged in the profit and loss account. It is a charge against profit. That's why to ascertain the correct profit, depreciation is required to be charged in the profit and loss account of the concern. Rather, it follows from the matching concept. The matching concepts gives us the idea that the cost of revenue should be matched with the expenses of the business. Hence, here depreciation is charged as an expenses of the business to ascertain the correct profit of the business. So first and foremost thing, depreciation is charged to ascertain the correct profit of the business. Secondly, to determine true and fair view of the financial position of the business. Yes, the second reason for charging depreciation, need for charging depreciation, is to determine the true and fair view of the financial position of the business. Now, asset is shown at historical cost less depreciation in the balance sheet of the concern. If depreciation is not charged, then what will happen? We will be required to show the value of the assets at an inflated price. That will not depict a true and fair view of the financial position of the business. So, in order to depict true and fair view of the financial position of the business, assets are required to show in the balance sheet at what in the balance sheet at original cost less depreciation. Three. Now, next is that is to generate fund to generate fund for the replacement of the assets. Now, students, as you know, depreciation is a non-cash expenditure. That means, though the depreciation is charged against the profit, it does not lead to the outflow of fund. Hence, when you are charging depreciation in the books of account, it helps to create fund for the replacement of the assets once the has once the asset has been used its useful life. So you need not to again replenish fund for the replacement of assets. If you charge depreciation, it automatically creates a fund for the replacement of the assets. So for the replacement of the assets, we require to charge depreciation. Next, to determine the correct cost of production. Now, depreciation is considered as an expenses while determining the cost of production. The correct cost of production, if you want to estimate or calculate the correct cost of production, then depreciation will be required to show as an expenses. Without charging depreciation, cost of production cannot be calculated correctly. So for the purpose of determining the correct cost of production, you will be required to charge depreciation. Finally, that is to meet the legal requirement. Yes, that is to comply with the Companies Act and the Income Tax Act. Depreciation is necessary to be charged in the books of account. As per the provisions of the Companies Act, dividend cannot be distributed to the shareholders unless and until depreciation is charged in the books of account. Similarly, for the purpose of the calculation of the taxable profit as per the provision of the income tax, depreciation is considered as an expense to be charged for the purpose of calculating taxable profit. So, in order to comply with the legal requirements of the business, depreciation is required to be charged. So, these are the causes, these are the necessity or objectives for charging depreciation in the books of accounts. Okay. Next point, I will discuss about the factors on which the amount of depreciation will depend. So, factors depending the amount of depreciation. Means what are the factors that determine the amount of the depreciation? Factors depending or determining the amount of depreciation. Now, firstly, the amount of depreciation depends on the original cost of the assets. Yes. Now, depreciation is calculated at a certain percentage on the original cost of the assets. Therefore, what is that? Therefore, the amount of depreciation will always depend upon the cost of the assets, that is the historical cost or the original cost of the assets. Because it is calculated as a percentage on the original cost of the asset. Secondly, the amount of depreciation will be depending upon the scrap value of the assets or the residual value. Scrap value or residual value of the assets. Now, what is the scrap value or the residual value? Now, the scrap value of the residual value is the amount which you are going to get at the end of the useful life of the assets when it is sold. Okay, it is the residual value. Okay, the scrap value when the asset is being used after the useful life of the assets, the amount which is going to you get back from the sale of the asset as a junk, that is called into your scrap value. So, what is happening? When you are charging depreciation, you are charging depreciation on what? On the original cost of the assets minus the scrap value. So, scrap value will be an important factor determining the amount of depreciation. Okay, so the cost minus scrap value, the net amount is being considered for calculating depreciation during the useful life of the assets. Okay, it will be depending upon the scrap value or the residual value of the assets. Number 3, it will be depending on the useful life of the assets. Yes, the useful life of the assets is an estimated life. Okay, it is estimated how long the assets can be used. Their assets may be physically present, but it may lose its useful life. So, the amount of depreciation is also dependent on what? The amount of depreciation is also dependent on the useful life of the assets. How long the assets can be used. That estimated life is also an important factor for determining the amount of depreciation. So, these are the factors on which the amount of depreciation will be dependent. Now, students, before I go to the next part of the depreciation, now depreciation is sometimes very commonly used. We use the word depreciation, try to understand. We use the word depreciation. When you use the word depreciation, actually depreciation is the fall in the value of an asset due to use, inflation of time, obsolescence, etc. There we use the word depreciation. Now, next is that along with the depreciation, sometimes we use the word amortization. Okay, what is amortization? Actually, amortization is the amount written off from the intangible assets. Okay, the amount which is written off from the intangible assets like goodwill, copyright, patent, okay, then trademark, that the amount when it is written off from the assets, then that is called into the what? That is called into your amortization. Thirdly, we have the word depletion. Now, what is depletion? Depletion is actually used in when we are using the assets. When the minerals or the product is being extracted from the assets slowly and steadily, what happens? The value of the asset gets reduced. Like in case of coal mines, oil refineries, okay. As the material is being dug out, its value slowly and steadily get reduced. Okay, the asset value reduced. In that case, we use the term that is called into your depletion. Next, we use the word obsolescence. Now, all these are the depreciation, amortization, depletion, obsolescence. What is obsolescence? Obsolescence is that when the assets become unusable, unfit for use because due to change in technology or improvement in the better version of technology. The assets may become what? The assets cannot be used, or assets may become unusable, obsolete. Then we use the term, what is that? We use the term obsolescence. And lastly, we use the term fluctuation. Now, what is fluctuations? Fluctuation. Fluctuation means increase or decrease in the market value of the assets. That is called it to be your fluctuation. The value of the assets may increase or the value of the assets will decrease. The market value of the assets, not the cost. Market value. The market value of the assets increases or decreases. It is tend to be. It is called to be your what? It is called to be your fluctuation. Okay, clear. Next, students, let me explain you the most important part of the topic, that is the methods of depreciation. So let me explain what? Let me explain you the methods. Okay, the methods of depreciation. Now, what are the methods of depreciation? There are several methods. Out of those methods, we are going to discuss with you the most two important methods. What are they? Number one, we have your straight line method, or it is called it to be fixed installment method, or original cost method. All similarly representing the same method of depreciation. It is either called it to be straight line method, fixed installment method, or original cost method. Now, according to this method, what is happening? The amount of depreciation is calculated as a percentage on the original cost of the assets. Uniformly, year after year. Hence, the amount of depreciation remains same. Okay, amount of depreciation remains same. So, what is fixed installment method? The amount of depreciation is calculated as a percentage on the what? On the assets. Okay, on the cost of the assets. And that's why the amount of depreciation remains same in case of the straight line method. Now, you also remember, if the percentage of depreciation is not given, then we use a formula, okay, for calculating the amount of depreciation. Now, what is the formula? If the percentage of rate of depreciation is not given, then we use this formula in case of the straight line method, that is annual depreciation is equal to cost of the assets plus installation charges minus scrap value divided by estimated life of the assets. Divided by estimated life of the assets. So what formula you use? Cost of the assets plus installation charges minus the scrap value. Installation charges is the additional expenses required to install the assets, maybe the frame, other expenses. So cost of the assets plus installation charges minus scrap value by the estimated life of an asset is used to calculate what? Is used to calculate the annual depreciation. That is what you understand by the straight line method. It gives the same amount of depreciation year after year. It is very simple and easy method to calculate depreciation. What is the other method we have? The other method we have is the second method that goes with is the reducing balance method. What is we have reducing or reducing balance method or diminishing balance method or written down value method. Okay. Now, as the name is suggesting, reducing, diminishing, here the amount of depreciation is calculated as a percentage on the reduced value of the assets. Hence, the amount of depreciation what happened reduces every year, diminishes every year. So that is what we have here for the diminishing or the reducing balance method. The rate of calculation is little difficult in case of the diminishing balance method, okay, but still we follow the diminishing balance method. Now, let me explain both the methods with the help of an example so that it clarifies it. What is the straight line method and what is your diminishing balance method? Suppose we take a cost of an assets is given, cost of an assets equals to how much it is given, suppose rupees 1 lakh, and the rate of depreciation is given, rate of depreciation is given 10% per annum. Then what will be the amount of depreciation in straight line method and the reducing balance method? We calculate first year, it will be what will be the first year, what will be the second year, what will be the third year, and so on. See, here the cost of the assets is cost amount of depreciation. Okay, here also we write cost and the amount of depreciation. The first year the cost was how much? 1 lakh. Rate is 10% per annum. Therefore, the amount of depreciation comes how much? The amount of depreciation is 10,000. Second year, the value cost reduces 90,000. The value reduces WDV, that is the cost value of the WDV. The 90,000, but the amount of depreciation is charged on original cost and it is within the same 10,000. Third year, the cost per value became 18,000. The amount of depreciation still remains the same as 10,000. It is always calculated as a fixed percentage of the original cost of assets. Here it is, the cost of the asset is 1 lakh, the rate of depreciation, the amount of depreciation is 10,000. Here it gets reduced, the WDV reduced in the second year 90. Next year on 90,000 it is 10%, that is 9,000. Okay, in the third year the value gets reduced to 81, so the amount reduced to 8,000. So if we compare, see here the depreciation remains the same, uniform. Here the depreciation reduces because it is calculated on the reduced value of the assets or on the written down value of the assets. These are the two methods. One is the straight line methods and other one is the reducing balance method. So from here we can differentiate between the straight line method and the reducing balance method. What is that? First thing, that is the calculation and the meaning. In straight line method, the depreciation is calculated on the original cost of the assets. Whereas in case of the reducing balance method, depreciation is calculated on the reducing value of the assets and on the written down value of the assets. Second difference, in case of straight line method, the amount of depreciation remains same or uniform every year. In case of the reducing balance method, the amount of depreciation diminishes or reduces every year. Third point is very important. In case of straight line method, the assets value may, the balance of the assets value may be become zero. But in case of the reducing balance method, the balance of the asset will not become zero. Fourthly, straight line method is most suitable in case of assets like goodwill, patent, copyright, trademark, etc. Reducing balance method is suitable for assets like plant and machinery, furniture, motor cars, etc. Finally, straight line method is very simple and easy to calculate. Reducing balance method is difficult to calculate. So these are the major differences between the straight line method and the reducing balance method. Students, let me now introduce with the numericals relating to the depreciation. So, before I introduce the numerical, you must know the journal entries relating to the depreciation. So, let me record the journal entries relating to the depreciation so that I can start the numerical in my next class. Okay. Now, journal entries relating to depreciation. What are the journal entries will be equal to past journal, which will be equal to past. First journal, when an assets is purchased. So when an asset is purchased, as you know, the journal entry will be assets account debit to cash if it is paid in cash. If it is paid by check, then it will go to the bank. And if it is purchased on credit, then it will be creditors for assets. Okay, so first entry, which will be equal to past, when assets is purchased, assets account debit to cash slash bank and creditors. Second entry, when depreciation is charged, depreciation is charged at the end of the year. When depreciation is charged at the end of the year, the journal entry will be depreciation account debit to assets account. Okay? Depreciation account debit to assets account. That is the second journal entry when depreciation is charged at the end of the year. Third, when depreciation is transferred, depreciation is transferred to profit and loss account. Entry will be at the end of the year. Entry will be profit and loss account debit to depreciation. Okay, these are the entries. You will be required to record this entry for the first time in the assets bucket, and these entries are to be repeated in the subsequent year. That is, for the entry for depreciation is to be charged, and the depreciation is to be transferred to the profit and loss account. These are the journal entries we are passing when depreciation is being charged to the assets. Journal entry relating when depreciation is charged to the assets. Okay, next, last. What is that? The asset may be sold after its useful life. So, what will be the journal entry when the asset is sold after its useful life? So, 124, when asset is sold, if it is sold at book value means at the same price you are selling without profit, without loss. Then it is the entry cash account debit, bank account debit to assets account without any profit and loss. It it is sold, cash account debit to assets, that is at book value, no profit, no loss. Now if it is sold at loss if it is sold, then the journal entry is cash account, bank account debit, loss on sale of assets account debit to assets account. Loss is debited, it is a loss is debited. Okay, and see that if it is sold at a profit. If it is sold at a profit, then the entry will be cash slash bank account debit to assets to profit and loss. Profit on sale of assets. Profit on sale of assets. Okay. This profit on sale of assets may be transferred to the capital reserve also. So these are the journal entries that are equal to past relating to the depreciation. So this is all about your depreciation. Before I start the numerical, in my next lecture I will be solving some of the few examples to understand the